Welcome to The Explainer. Today, we're talking about something pretty big happening in the global markets. For a long time, investors were, well, pretty wary of China. But that seems to be changing, and fast. The money is rushing back in. So what's the deal here? Why the sudden change of heart? After years on the sidelines, why are investors all of a sudden piling back into Chinese stocks? What's different now? And the signs are impossible to miss. Look at Hong Kong's Seng index. It just jumped about 2% in a single day. When you see a move like that, you know there's real momentum building. That definitely turns heads. Okay, so what's behind all this optimism? It's not just one thing, not by a long shot. It's really a mix of four key things, all coming together at the perfect time. So let's unpack this. We've got four main drivers here: stronger profits, new government policies, tech sector growth, and even a shift in geopolitics. Put them all together, and you get a picture that looks a whole lot better to investors. First things first, you can't have a real rally without solid numbers to back it up. And that's exactly what we're seeing. Industrial profits just took a huge leap, much stronger than they've been in a while. That's a massive confidence booster right there. And then there's a really interesting policy shift coming from Beijing. They're rolling out what's being called an anti-competition program. Now, what does that mean? Basically, they're trying to stop that super intense, cutthroat price war style competition. The end goal? Let companies actually make more money, boost their profit margins. And, investors love to see that. But it's not just about policy. The growth story itself is just really exciting. We're not talking about old school industries here. The real buzz is around these cutting edge sectors: AI, robotics, all that high tech stuff. That's where you see this explosive growth potential that's honestly tough to find anywhere else right now. And the last piece of the puzzle, geopolitics. For years, all the political friction was a huge red flag for international investors. It just felt too risky. But now, it seems like some of those tensions are starting to cool down. When a big risk like that starts to fade, it makes it a whole lot easier for people to put their money to work. So all this good news starts to create a kind of snowball effect. Once a market gets this much momentum, it creates this powerful ripple that's just really hard for anyone to ignore. And this momentum builds on itself, creating this classic feedback loop. Think about it. You've got all these investors who sat on the sidelines for years, maybe because of the crackdowns in tech or property. But now, the rally is so strong, they're basically being forced to jump in. The fear of missing out, FOMO, is becoming a bigger driver than the fear of risk. They just have to get in on the action. Okay, so to really get why this China rally matters so much right now, we've got to pull back the camera and look at what's happening around the rest of the world. Yeah, this isn't happening in a bubble. It's a huge contrast to what's going on elsewhere. In the US, there's a lot of uncertainty, talk of a government shutdown, questions about jobs data. It's just unpredictable. And at the same time, you see a ton of money flowing into things like gold as people look for a safe place to park their cash. So this gives you a really clear snapshot of what's going on globally, right? You've got China stocks rallying, US markets feeling kind of shaky and uncertain, and gold surging. In that kind of environment, China really starts to look like one of the few bright spots out there. And what's really wild is how this all ties together. China isn't just the star of its own stock market story. It's also a massive player in that gold rally we just mentioned. A huge amount of the buying that's pushing gold prices up is coming from China. It just goes to show you how much influence it has on asset prices across the board. So this brings us to the big question, the one everyone is asking. Is this for real? Is this a genuine, lasting comeback for China's market? Or is it just a short-term blip, a temporary rally that's just feeding off of uncertainty everywhere else? That's what we'll all be watching.